Good afternoon, distinguished leaders of multilateral development banks and development finance institutions, captains of industry, governors present, esteemed guests, ladies and gentlemen. I'm Victor Oladukan. It really, as always, is a pleasure, it's an honor to MC and to moderate this knowledge event at the 2025 annual meetings of the African Development Bank Group. A very, very pivotal one for that matter as we get ready tomorrow to hear the decision that the governors of the bank have made with regards to the new leadership that will steer the bank into the future. We gather today for an extremely important event, and its timing could not have been better. Mobilizing African institutional capital for its development, financial sovereignty, and resilience. In a world where donor countries have cut aid by up to 10% and FDI to Africa has fallen by 12% to almost $40 billion, our continent faces a huge gap, and I'm sure our panelists will be talking about that in terms of the financing gap. So, as global trade fragments and capital flows shift to developed markets, Africa must seize this moment to harness its own resources. And in the previous panel that we just heard, I guess we're speaking the same language. So we'll explore today how knowledge, policy, and partnerships can unlock this potential and ensure financial sovereignty and resilience against external shocks. The responsibility before us, therefore, is to help shape a future where Africa's capital powers its development. It's a future that is already here. It's not off in the future. For those watching online, feel free to share your ideas at #AFDB AM2025 and join this transformative dialogue. With that being said, it's an honor to have with us one of the key leaders helping position the bank as a global champion for Africa's self-reliance. Please join me in welcoming the Vice President for Private Sector, Infrastructure and Industrialization. He has one of the longest titles at the bank, tells you how important that is. As he comes to the podium, please give a very warm welcome to Solomon Quainer. And as you're about to find out in just a few moments, I tell him repeatedly, you know, if this finance thing doesn't work, you do have a job as an MC, as a television or radio anchor, and you'll see why in just a few moments. Over to you, Solomon.
Talk about pressure. Talk about pressure. But Victor, I cannot speak as eloquently and as dynamically as you can. But I've learned a lot in the last 5 years just observing Victor. But Excellencies, esteemed governors, distinguished guests, ladies and gentlemen, good afternoon. I'm delighted to welcome you to this crucial side event on mobilizing African institutional capital for sustainable development and private sector growth. This gathering reflects our collective ambition to chart a new course for Africa, one where our resources work harder for Africans, and our capital, both human and financial, powers inclusive and resilient transformation. Africa today stands at a pivotal juncture. So the continent needs between $68 billion and $108 billion per year to address its infrastructure gap. Yet, according to the Global Infrastructure Hub, only 2% of global infrastructure investments flow to Africa. Meanwhile, the development assistance and concessional resources are rapidly dwindling, as we've seen over the last few months. But here lies both the paradox as well as the opportunity. Africa is not poor. African institutional investors, that is pension funds, sovereign wealth funds, insurance companies, and even central banks, collectively manage over $2.1 trillion in assets. President Adesina focuses on global flows, I, Solomon, focus really on harnessing the $2.1 trillion of African assets under management. So there's a division of labor there. And this is something I'm passionate about. And where is Chinua? We'll talk about InfraCredit again because that's another area of passion. So if just a fraction, let's say even 5% of these funds, which are primarily invested in government treasuries, and these government treasuries are really, not covering capital expenditure, they're mostly covering recurring expenses, yeah? But if only 5% could be channeled into infrastructure and private sector industrialization projects on the continent, Africa could unlock over $100 billion in long-term capital. So the question is not whether the capital exists, it does. The question really is, how do we mobilize and direct it at scale towards productive, impactful investments in Africa? So this is where the African Development Bank has taken bold and catalytic steps, but mostly with partners. We have launched the Africa Investment Forum, which has helped secure over $150 billion in serious investment interest since its inception. Now, the Africa Investment Forum has several members. It's not just the AFDB. We have AfriExim, we have AFC, we have Trade and Development Bank, of which I'm on the board. We have Islamic Development Bank, EIB, we have Badea. So once again, I want to emphasize partnerships. Our private sector credit enhancement facility and risk mitigation instruments continue to de-risk private investments across Africa's most challenging markets. But we must go further, and that is why the African Development Bank is leading by example, but also working with partners. We are building a comprehensive ecosystem to unlock African institutional capital through coordinated efforts, and I'll mention a few. The AIF I just mentioned, so I won't repeat. The Capital Markets Development Trust Fund, which we have, and it allows us to strengthen domestic capital markets and investor capacity. Then strategic partnerships with institutions such as the Private Infrastructure Development Group which is a European institution, and ourselves and several other partners have worked together with the Nigerian Sovereign Investment Authority and Mr. Chinua himself, because he was one of the early developers of this idea, to establish InfraCredit in Nigeria, which is a monoline guarantee agency, essentially providing credit wraps to allow local pension funds, insurance companies, and other pools of excess liquidity long-term to invest in the infrastructure and productive sectors in Nigeria. And I believe, yes, the exchange rate keeps changing, but, at one time it had mobilized over $300 million of Naira equivalent long-term money. And this is what we have gone further. We've replicated this in East Africa. You may have heard about Dhamana in Kenya. We've replicated that. And we plan to actually sweep across Africa doing this to find a way to really mop up a significant part of this 2.1 trillion. The next country we plan to pilot this or replicate this is Ghana, with the Ghana Infrastructure Credit Enhancement Facility. Next, we plan to do this in Francophone West Africa. So as you can see, we overlay it across markets. We prefer regional to country. And the idea is to really mobilize the local pension funds, insurance companies, and other large pools of capital locally. Depending on our engagement with African pension funds, sovereign wealth funds, and industry associations like the Pan-African Fund Managers Association, but we also have the Africa Sovereign Investors Platform, which is a gathering of African sovereign wealth funds, FONSIS in Senegal, the Ghana Infrastructure Investment Fund in Ghana, the Nigerian Sovereign Investment Authority, the Egyptian Sovereign Fund, ITHMA Capital in Morocco, Agaciro in Rwanda, and then also, the Angolan Sovereign Wealth Fund. they've come together, and we continue to work with them in that association to share knowledge, but also to potentially come together and co-invest in other markets, other African markets as well. And by working also with platforms such as Making Finance Work for Africa, we are supporting data-driven policy dialogue and innovation to expand the universe of investable assets, including private equity, infrastructure, and green finance instruments. We will also work closely with partners such as the African Pension Supervisors Forum, the African Securities Exchanges Association, of which I see the DG of SEC in Nigeria is here. And we would also work with global asset managers to build trust, transparency, and investability across the continent. So, Excellencies, ladies and gentlemen, mobilizing Africa's own capital for its development is not just smart economics, it's smart sovereignty. It reduces our dependency, enhances our resilience, and ensures that African savings fund, African dreams. This moment demands vision, it also demands innovation, and finally, it demands action. I call on all institutional investors here, public and private, to partner with us. It's great to see my good old friend, Ethiopis Tafara here. He's the new Vice President for Africa at the IFC. Ethiopis, we've worked together a long time. I look forward to replicating this over and over again. Let us pool our capital, let us pool our minds, let us pool our ingenuity and our resolve to build a future where infrastructure is no longer a bottleneck, but a backbone, where our markets are no longer overlooked, but overbooked. Together, let us make African capital work for Africa. I thank you, and I'll stay in my job, Victor.
I think you should stay in your job. I don't think there's any media organization out there that can afford you. You're way too expensive. But thank you very much for setting the stage for us this afternoon. To my mind, this is one of the most important conversations that we're having here at these annual meetings. Without the institutions represented here today, without their intellectual and innovative financial genius, as well as the partnerships that they help put together, the dreams that we have to mobilize institutional capital on our continent will really come to naught. So it really is an honor and a privilege for us today to have a distinguished group of panelists who are experts in their field, proven track records, and we do not take your presence here for granted. So permit me at this point to invite to the platform the following. Mrs. Boitumelo Mosako, the Chief Executive Officer of the Development, and I'll ask that you sit until we finish the introductions, if you don't mind, and that will be the case for each of our panelists. She is the Chief Executive Officer of the Development Bank of Southern Africa, DBSA, known to almost everyone here in this room. Prior to her appointment, she served as the DBSA Chief Financial Officer, focusing on strategy, investor relations, supply chain management, and information tech. An experienced chartered accountant and executive with vast experience in the financial sector that spans more than 22 years. Prior to joining DBSA in 2018, Mrs. Mosako worked at the Southern African Bureau of Standards as a CFO. As she comes to the platform, please give her a very, very warm round of applause. And she's joined by Mr. Ethiopis Tafara, who was mentioned just a few moments ago by Solomon Quena. Ethiopis Tafara is IFC's new Regional Vice President for Africa. In this capacity, he oversees all investment and advisory operations in a region with a committed portfolio of over $17 billion. Previously, Mr. Farah served as the Vice President, Chief Risk, Legal and Sustainability Officer and Partnerships for the World Bank Group's Multilateral Investment Guarantee Agency, MIGA, where he was responsible for the supervision and oversight of MIGA's Finance and Risk Management Group, Economics and Sustainability Group, as well as the Legal Affairs and Claims Group. What you can see there, I believe that IFC took full advantage of his potential to rope him into so many groups. We are honored to have you today. Really thank you for coming. Please give him a very, very warm welcome as he takes his seat on the platform. And he will be followed by Mr. Dennis Charles Kouassi, the CEO of la Caisse Nationale de Prévoyance Sociale. He is a prominent Ivorian expert in social security and the current director of Côte d'Ivoire's National Social Insurance Fund, CMPS, a role he has held since 2014. He holds a degree in economics from the University of Abidjan and graduated top of his class at the Ivorian Center for Social Security Training. His career at CMPS began in 1988 as an organizational analyst, and since then he's risen through the ranks through various leadership roles, including Deputy Director General. Please give him a very, very warm Abidjan welcome, Akwaba. And our panelists are going to be joined next by Dr. Timi Agama, who is the Director General of Nigeria Securities and Exchange Commission, SEC. He was appointed by President Bola Ahmed Tinubu in April of 2024 and confirmed by the Nigerian Senate in June 2024. He's a highly experienced financial regulator with over 2 decades of experience in securities, capital markets, and financial regulation. We're honored to have you here today, and we look forward to listening to some of the great ideas that you're going to share with us. As he comes to the platform, again, please give him a warm round of applause. And last but certainly not the least, our final panelist is Mr. Chinua Azubike. He is the Pioneer Chief Executive Officer of InfraCredit, an infrastructure credit guarantee company, and he's led the establishment of the first of its kind AAA-rated credit enhancement institution in Nigeria, something he did in 2017. As with many of our panelists, he brings decades of experience to his role in capital markets and structured finance, and has been responsible for leading InfraCredit in its pioneering role of connecting Nigeria's debt capital markets, or rather, Nigeria's debt capital markets to long-term local currency infrastructure finance by using guarantees to mobilize domestic credit and the private sector investors. So please, as he comes to the platform, again, give him a warm round of applause. Oh, thank you. I'd like to start with a generic question for all of our panelists. And again, in the interest of time, if we could keep our responses short, tight, succinct, that would be great, because it's pretty much the same question, but I want you to come at the issue from different perspectives. Every single day, wake up in Africa. There are great ideas, great business ideas coming out of the wazoo. There are more business ideas than there seems to be money. But as we know, money has never been the problem. There are a lot of bottlenecks, and you guys, you know what each one of those are. From your perspective, what would you consider to be the key obstacles currently preventing institutional capital in Africa from being deployed at scale in the manner that we need for long-term development? And what specific reforms, whether they be regulatory, policy, or market-based, do you propose? I'm going to start with Botimo, if you could go first. And there are microphones next to you, so if you could, there's a button there, so when it's your turn, you do have a microphone to use.
Great. Ladies first. Okay, great, thanks. Thank you once again for the opportunity to be part of this distinguished panel. When one reflects on what the challenges are, I think the biggest challenge that we face on the continent, and this is what was alluded to when the report for the Economic Outlook report was presented yesterday by Professor Kevin, is issues around governance. But I'm not going to touch on governance because that is the number one issue. The second thing that I would like to mention is project preparation facilities. You know, it's important that as institutions within the continent, we're able to mobilize project preparation facilities so that we can prepare projects, de-risk them, and get them to bankability so we can catalyze institutional funds and private sector participation. The third thing is issues around regulation and bureaucracy. You know, when you look at projects, getting the necessary permits, you know, can take a long time. So these are the issues that we need to address, issues around bureaucracy, around permitting. Fourth thing, we need to look at skills, you know, getting the right skills for, you know, for project implementation, for structuring. That is something that we also need to look at. One other thing that I'd like to mention is we need to ensure regional integration. And one of the biggest challenges when it comes to integration projects is the different regulations. You know, countries that are within the same region, but with different regulations. I think one of the things that we need to address that can make investment into projects much easier is the issue around standardization. Thank you.
Thank you very much, Botimo. Regulations, bureaucracy, skills match, and homogenization of regional integration regulations. A very good start for us. I'm going to come to Ethiopia next. With a portfolio of $17 billion on the continent, obviously money hasn't been the problem. I'm sure there's much more that you can do. From where you sit, what are some of the critical obstacles that we need to overcome in order to accelerate the use of institutional capital on our continent?
So first off, thank you for being invited to be here. I really appreciate the opportunity.
If you could speak directly into your microphone.
I am speaking. Is it on? Okay, there we go.
There we go.
So many thanks for the invitation. I'm going to start off where Solomon started by noting, and my calculations differ probably because we excluded central banks, but there's about $1 trillion under management between pension funds and sovereign wealth funds. And much of that invested either in securities outside of Africa or in sovereign issuances, in part because of regulation and supervision, and that's something I think we need to look at to be sure that regulation and supervision is not resulting in that money not flowing to opportunities on the continent. But the other reason is the lack of opportunities, both off exchange as well as on exchange. Off exchange, Boitumelo touched upon what I think is the key issue, which is finding enough bankable projects to which you can direct some of these assets under management. And I'm struck by the number of projects that governments would like to finance with private capital. And there are tons of those, and there's no shortage of money. It's just that the projects are not, they're not ready for investment. They're not yet bankable. And I think we are missing a trick collectively if we don't figure out how to get those projects to bankability. And at the end of the day, bankability is really about getting the allocation of benefits and risks properly calibrated between the private sector and the public sector. And I think there's a role for us at IFC, at AFDB, and other institutions to play in helping getting that calibration right so the governments feel they're getting a good deal. and not simply engaging in a project where that calibration is off to their disadvantage. But the other issue is on exchange, the limitations in terms of the offer, right? We need to diversify what's available on exchanges in markets. There are few corporate issuances. There are sovereign issuances, and so the money is going to that. But we need to create more opportunities for investment. And we tend to think that it is really a matter of just promoting more transactions to be traded on exchange. And I think we fail to look at the institutional side of things. So I'm going to lean on my past as a regulator and say that markets are not very complicated, right? You need a place to trade, and that's either, it could be a tree, could be a baobab tree, a buttonwood tree as it was in the United States. You need property rights, right, so that you have authority or ownership over what it is you've bought. But more than anything else, for these markets to work, what you need is trust. You need to trust that you're buying what you expect to buy. You need to trust that you're going to get paid what you expect to get paid. And that trust has never been blind, right? In small communities, it's the community and the interaction among a small number of traders that leads to that trust. But in bigger markets, you need laws, you need regulations, you need institutions to enforce those laws and regulations to give the trust to the players in the marketplace. And I think we need to do a little bit more work to build the trust in our markets so that there is an appetite and an inclination to buy and sell on those markets, in addition to looking at diversifying the offer.
Thank you very much, Ethiopius. Allow me to ask a follow-up question here. Thank you very much for the points raised. But do you think that there's a catch-22 here? You talked about the lack of bankability for projects, particularly in the public sector. What role can institutions play, like yours, to provide the necessary advisory services to accelerate the process? What are the bottlenecks? Why isn't this being done at scale?
It's a very good question, and one I've explored internally. When we get asked by governments to help with bankability, we tend to point them to a pot of money that they can tap and then find advisors to help them with the bankability of their projects. I actually think we should be providing the skills ourselves, because in many respects, what the governments want is a trusted advisor, somebody who has historically looked out for their interests, right? And I keep telling my colleagues at the bank that the IFC can play a role, but the bank is particularly important because they've been the trusted advisor of governments for 80, 90 years, right? And it's that trust that's going to lead them to actually lean into making the adjustments to the project that are necessary for private capital to flow. So I'd say, speaking for us as public institutions, rather than point governments to a point of money, actually have the skills in-house to provide the advice that's needed to get these projects to bankability. And I'd say we need to do that in partnership with our fellow institutions. So this is not something we should take on by ourselves at the IFC or the bank. We should be working with the AFDB and other regional institutions to help with the bankability of these projects.
Thank you very much. Go next to Chinua Zubike. Your take? From where you sit and your experience so far.
Okay, thank you. And it's a pleasure to be here. It's an esteemed pleasure to join an esteemed panelist. And I think Bartomelo and Ethiopians have covered everything, actually. So it makes my job easier.
Could we have the audio team raise the volume a little bit?
Can you hear me?
Yeah, now we can.
Okay, great. So I was saying that Bartomelo and Ethiopians had covered everything, actually. It makes my job much easier. I'll just focus on a few points around perception of risk as one of the barriers to mobilizing private capital from institutional investors. And I think it's been well documented that in the real terms, the actual risk that infra assets tend to portend is much lower than what is perceived. Our experience as InfraCredit has been that we have, over the past 8 years, not seen, we've had 0 losses on a portfolio of over 20 projects across 12 sectors, which reflects the resilience of infra assets. And that requires a bit more knowledge exchange, maybe capacity building, and working both with institutional investors to use performance data to reflect the actual, performance of these assets is not as perceived. And the expectation is that this builds confidence. We have experiences of where guarantees have been provided first-time borrowers to raise long-term finance of 15 years or so in the capital markets, and the same pension funds, after the performance of that asset, have invested subsequently without the need for guarantees, which reflects the fact that it does have a catalytic impact. Building relationship on mutual trust is also very key. It's one of the softer issues that I believe tends to sort of impact on why we don't see projects move as quickly as one anticipates. And that mutual trust relationship obviously means we need convening power of some of the development partners involved when we engage the government, and also with the institutional investors, the domestic institutional investors as well. And with building mutual trust and also providing data could be very significant in addressing the other factors, because usually what tends to happen is, projects actually can influence policy. And it's usually people react by what they see. And we've seen how regulatory changes have happened because governments see projects actually come to fore. And that brings me to the last point, just around project preparation. It's such a recurring theme. So every year we gather around and we say project preparation is the problem. But we do have quite a number of facilities that have been seeded across Africa. At last count, is over 30 of these prep facilities exist. The question then is there something we need to reimagine in the institutional models for how project prep is actually implemented? Our view is that we need to rethink the model and sort of look at how better organized can these facilities be structured. What is the, when they're designed, how are they designed for outcomes? These outcomes feasibility studies, or is outcomes financial close? I think how outcomes are built into the design of project preparation facilities would influence the modalities through how they're designed to execute and deliver results. And that would bring, for us, we think, we now need to reimagine and redesign these facilities. We've looked at embedded models. There are models where, you could embed consultants working between the financial institution itself and then also government, with some form of KPIs that is outcome driven. So the concept of prep needs to be reimagined and redesigned. Otherwise, we keep having the same conversation and the same result. Thank you.
Thank you very much. Excellent points. The nexus between relationships, mutual trusts, and finance. Warnings about projects influencing policy rather than the other way around, as well as reimagining project prep and facilities. Excellent one. We'll go next to Dennis Kwasi. Your take. I believe that there are also headsets on your chair, so for those who are not French speaking, you might want to put on your headsets. Thank you. Yeah, we can hear you. Bon.
Alors, moi je vois... Allô? C'est bon? Alors, par rapport au financement des économies africaines, moi je vois 4 préoccupations. La première, c'est la faiblesse de la mobilisation de l'épargne intérieure. La deuxième préoccupation, c'est la structuration financière des entreprises qui mettent trop l'accent sur l'endettement plutôt que l'equity. Il y a le problème de gouvernance qui a été déjà évoqué. Et en quatrième position, l'éducation financière qui manque. Sur l'éducation financière, je vais vous donner un élément peut-être qui va vous faire rire un peu. Moi, j'ai rencontré des gens qui ont construit des maisons, des responsables qui ont construit des maisons à $1 million dans leur village, mais ils n'ont pas $100 000 sur leur compte titre. Donc, vous voyez que l'argent ne va pas au bon endroit. Une maison dans un village, ça ne procure, ce n'est même pas un bien. Et alors que cet argent aurait pu venir dans le système financier et jusqu'à la bourse. Alors, concernant la faiblesse de mobilisation de l'épargne, les fonds de pension comme nous, les caisses de sécurité sociale, jouent un rôle très important. Et j'aurai l'occasion d'illustrer ça tout à l'heure par rapport au cas de la CNPS, où on a mis en place des mécanismes de mobilisation d'épargne et nous avons eu des chiffres très, très intéressants. On en parlera tout à l'heure. Il y a, concernant la structure, la gouvernance, on a remarqué que tous les investissements qu'on a faits dans des entreprises bien structurées, des entreprises moyennes ou des grandes entreprises, tous ces investissements nous donnent de bons rendements et de bonnes rentabilités. Par contre, des fois où on a essayé au niveau des PME, on a eu des difficultés qui sont liées à des difficultés de gouvernance. Et donc, ce que nous sommes en train de faire, nous sommes en train de créer un fonds spécial pour les PME, parce que toutes les ressources que nous avons, que nous injectons dans l'économie, soit à travers les entreprises, soit à travers l'État, quand nous prenons des emprunts obligataires, on n'a pas encore trouvé de solution pour les PME, parce que c'est un vrai gros problème de gouvernance. Et donc, nous nous attelons à cela. Nous allons créer un fonds pour cela. Donc, tout à l'heure, on pourra détailler un peu certains éléments.
Thank you very much, and very proactive stance there, creating special funds to enhance governance, particularly with SMEs. Excellent one. We're going to come next to Timi Agada Gama for your take, and then we'll go into some specifics.
Right. So thank you very much for inviting me. It's indeed a pleasure to be here to join heads in dissecting this very, very important issue. What are the obstacles? I speak from the angle of a regulator, even though I also wear the cap of an operator sometimes. Clearly, the first as a regulator is regulatory framework. Do you have the enabling regulatory framework to drive investments into, government projects, into, private credit into government projects and all of that? That is very critical. The other item that needs to be, looked at again, which, I mentioned, is risk perception. Perhaps we really need to understand exactly what risk is and try to look at it from a contextual point of view. I see risks differently, and you also may see risks differently. The cup is either half full or half empty. So clearly, it depends on exactly what you see as risk, because it is about how the environment that you have grown up that gives you a perception of what risk is. What else would there be needed for us to have this, development happen within our sector? Another part is, the investment options. Are they available? Right. And that speaks to the issue of origination. Because clearly, a lot of times we do like salesmen, just bringing products for people to buy. No, that doesn't work anymore. It is marketing, knowing exactly the kind of products that the people need, and then, of course, producing the product, and you will find anybody looking for the product because it is available to buy. So that is very, very critical. So creating an origination pool is very important, to getting people to understand exactly what to do in order to bring more products to the market. Then, of course, it has also been mentioned, and it's very critical, capacity. Capacity, capacity, capacity. That is very, very fundamental. A lot of us may claim that we know or we understand, but perhaps we really don't know. So we need to dig deep to understand exactly what is needed. How do we understand the structures? How do we understand the market? How do we understand the investors? How do we understand the variance of thought process along investors and the people that are investing? So these are very, very important. And lastly, currency and liquidity. These are critical. They are critical because currency volatility is something that we have to live with, we will continue to live with, But perhaps there needs to be something that needs to be done to make sure that that is also dealt with. More so for Africa, because we are a commodity-rich nation or commodity-rich, continent. What are we looking at? How are we looking at bringing back commodity as a basis to cushion our currency strength? That will be very important to look at, rather than just looking at it from the angle of trust or perception of what our currency is. Because if you measure it with other currencies, the great question is, what is the difference? Yeah.
Thank you very much, Timmy Agama. I like what you said about smart marketing. Solomon Quena, who's about to leave us, yes, I'm throwing him under the bus. Elliot talked about smart economics, smart skills, smart innovation, and smart sovereignty, essentially important. As we go along, if we can unpack some of these terms, that would be very much appreciated. But I want to ask Ethiopis here. Timmy talked about risk perceptions. One person's risk is another person's bankable and secure project. It seems to me that there's an asymmetry of risk perceptions. Again, in your role at IFC, and given the enormous value of business that you do, how can we bridge this gap here?
So our very involvement in a project should help with bridging the gap in perception. I've always said that the perception from afar is very different from the reality on the ground. We have the benefit of having a footprint on the ground throughout the continent. And by virtue of that footprint, we should be able to make the case to investors that we understand the risks, that their perception is a perception, but be willing then to de-risk them, to bring them along, but say, listen, I'm prepared to take enough of the risk to bring you along and to convince you by virtue of that, that you're not taking as big a risk as you think. But that is our role. Our role is really to bridge that difference in perception from what they perceive, from what we know to be the reality based on our experience and based on our presence in a country. And that's, I think, one of the assets of organizations like ours and other DFIs and other MDBs.
Thank you very much. Our next question, I'll come to Botimo here. Agreed, you're one of the founding members of the Africa Investment Forum, but specifically I'd like to find out how, in collaboration with other regional DFIs and the African Development Bank, how can you create standardized co-investment platforms and processes to reduce transaction costs and enhance efficiency for institutional investors?
Thank you. I'm going to make the examples of what we have managed to accomplish within the South African environment, specifically touching on all those challenges that I mentioned and how they were mitigated through the REAP, the Renewable Energy Independent Power Producer Program. It was a collaboration between ourselves, the DBSA and our government, where certainty was created around investment in renewable energy, where offtakes were certain guarantees were provided by the government and a bidding process undertaken to also to deal with the cost to consumer at the end of the day. So what we then found is, in terms of private sector participation, it actually created an enabling environment for private sector, where the private sector even invested in the preparation of the projects themselves. This resulted in investment of over $20 billion within the South African environment. So it is possible for these things to happen. And when you look at where those funds came from that invested in these programs, they came from the domestic market. Yes, we have the benefit of, as South Africa with our deep capital markets, but I do believe that these models are, replicatable, because if you look at, for instance, with the geothermal program in Kenya, which is adopting the same approach. The second thing is, with the learnings from that, what we then adopted, going back to your question on standardization, is we then decided that we're not going to approach investments on a project by project basis. We're actually going to create investment programs that are sector based. For instance, we decided to develop, with the need for student housing in South Africa, we developed the student housing investment program, where we then, did all the studies, standardized all the documents, and actually enabled private sector to participate in the program. We have what we call the Water Partnership Office, together with our Department of Water, where we have a program for water investment to strengthen water access in our municipalities, our sub-national governments. And what did we do there? We actually managed to source funds from the GCF to support the program. They gave us about $235 million for it, and $35 million of that goes to project preparation, because we know that it is important to have the prep facilities to enable investment. We also created a program for one border post. Currently, the 6 RFPs that are out to also enable participation in that program. So we have seen the importance of a programmatic approach to investment, because then you have standardization, you have scale, and you also have speed. We have seen it work, and this is, the program that we do, with the water program. I remember at the last AFDB meetings together with our partners, these are the projects that we then showcase. So if, it's not that these things are not possible, they are possible, these models are proven, we just have to make sure that, within our partnerships, we replicate these models across countries. Thank you.
Thank you very much, Botima. And I'd like to really advocate for DBSA here. They've done a phenomenal bit of work, both in the water space that you talked about, as well as student housing. Now, considering that our population in the next 25 years is going to hit 2.4 billion people, the need for student housing in universities, if we're going to build skills, is a critical one. And I do hope that your organization can share knowledge with other institutions and other countries to see what you've done very, very successfully in Southern Africa, because the need is huge. So I do hope that there are investors in the room who are taking cues from this and looking at opportunities. So again, talking about risks and de-risking projects, I'm going to come to Chinua Azubike here. InfraCredit has played a crucial role in mobilizing domestic capital for infrastructure by de-risking projects, quite a bit of them. What lessons can be drawn from your experience, and how can some of the instruments like credit guarantees and co-financing platforms be standardized or regionalized to unlock institutional capital at scale?
Thank you very much. Part of my earlier conversation here was around knowledge exchange. And what we find is that, again, this perception versus actual risk needs to be addressed as a very deliberate strategy, which is investing in knowledge sharing alongside deal execution, especially as you work with both the regulators, but also importantly, the institutional investors. What this does is that it builds capacity and also ensures that replication can also happen even without guarantees in the future. Like I said, we saw where we were able to support the first 15-year green bond, and subsequently the same hydro project was able to raise financing from the same pension funds without a guarantee 2 years later, simply because we had gone through a very methodical process of building capacity, conducting due diligence with investors. So that's one very important point. The other is, the building a relationship with our development partners. We're very lucky to have the likes of course, the Sovereign Wealth Fund in Nigeria being an anchor investor in InfraCredit, alongside other DFIs, which include AFDB and AFC, and also the UK through FCDOs. What that has done for us is that we're able to leverage multiple tools to address risk perception. And what this helps to do is it bridges a gap, especially a knowledge gap, because many times when you're innovating and sort of taking on sectors that don't tend to have a track record in the market, you need risk-sharing arrangements where you can actually work with partners that are willing to take first loss risk and help to catalyze financing. And so that has helped in enabling us to go into underserved sectors like, renewable energy projects for mini grids in underserved communities, enabling green bonds to finance those type of asset classes. And now we're currently working towards scaling that up in the capital market. So we're looking forward to engaging our able DG to support an aggregation of these smaller deals so that they can actually access long-term finance in the capital market. But this took a staged process. We had to develop, learn, and then now we're looking at scaling that in the capital market. So that process is very valuable. And when we think about replication is really it is about institutional knowledge. And I think one of the things listening to Bartomelo and thinking about how we can learn from the South Africa experience is that we need to be very intentional about institutional knowledge and sharing that amongst peer learning, very deliberate, because what appears to be a gap is not necessarily capital, capacity, and the absorptive capacity of capital. And a lot of that will come from what are the lessons learned and how are we institutionalizing that lessons learned in order so that it doesn't take, it wouldn't take Ghana, for example, 10 years to achieve what InfraCredit has been able to achieve in Nigeria, because we're very deliberate in sharing that knowledge, or Kenya or other markets.
Do you have platforms that enable you to share knowledge as freely as you propose?
We are currently engaging. We don't have a formal platform, but we have a program where we do, it's called Infrastructure Exchange, Knowledge Exchange Program. And we use this to actually hold roundtables in Nigeria. We're now trying to do one in Ghana, and also very keen to replicate that in other markets to the extent that we have strong partners willing to support that.
Fantastic. Again, my question earlier to Ethiopius was really a follow-up, but I'm going to come back to you very quickly and segue from where Chinua left off. What would you see as some of the most promising strategies for mobilizing African institutional capital, particularly in the key sectors of industrialization as well as infrastructure? What would you consider to be some of the most successful strategies?
So we have two sets of funds. One set that are debt funds, and another set that are equity funds. And we have fundraised for these funds. And the way it works is we deploy the funds alongside an IFC project. And let's imagine we're extending credit to some company. As long as the criteria upon which those funds were raised are met, we would then deploy those funds in that debt fund alongside the IFC. And in essence, we replicate our book for the institutional investor. And they piggyback on all of our due diligence and our quadruple bottom line, whereby every investment or every project we finance has to be financially sustainable, environmentally and socially sustainable, has to have development impact, and has to be climate resilient. So they don't have to do any of that work. We do all of that work. And in essence, replicate our debt book for them, right? And in that way, we've mobilized a fair amount of money from institutional investors. We do the same thing on the equity side. So we have a set of equity funds where when we take an equity stake, they come alongside, as long as the criteria have made, and take an equity stake as well. And again, they piggyback on our due diligence. And these funds, some are geographic, some are thematic, right? So we are able to mobilize institutional investors into what is of interest to them, either from a geographic standpoint, Africa, for example, or from a thematic standpoint, energy, for example. And it's worked quite well. On the equity side, my recollection is we at some point had mobilized about $10 billion of equity investment, equity money. Now, not all of it has been deployed. And on the debt side, we've been doing some fundraising quite successfully. But this is a way for institutional investors to get exposed to our book, both on the equity side and the debt side, and it's worked quite well.
Allow me to be the angel's advocate here. One of the biggest criticisms of MDBs globally is the speed at which capital is deployed.
Yeah.
Are there things that we should do to, again, reimagine, to use Chinua phrase earlier, our instruments? And are we really moving fast enough to meet the needs of institutional, of investors, and particularly the private sector? Your thoughts on that? Could we and should we move faster?
So I'm not sure it's a matter of instruments as it is a matter of internal process, right? I do think we need to be much faster in our deployment and much faster in our engagement on projects, something which we're actively looking at. And part of the reason we've devolved decision-making to the regions and taken it away from it being centrally based is to actually increase the speed with which we respond, and we have. Of course, there's always room for improvement, and we're looking for our processes to be more responsive to what clients are looking for. When I travel, I always meet with clients, and I always ask one question: why us? Frequently, they say it's not because you're the fastest. And it's not because you're the cheapest, although we're trying to improve on both fronts. You do bring a set of standards and you do bring some diligence that helps us, right? But we want to be known and available on all three fronts, right? So we're looking to be faster. And I don't think it's a product issue. I think it's a process issue.
Thank you very much. I'm going to come to Dennis Kwasi next. Given the growing need for diversification and resilience, which asset classes or sectors do you see as particularly attractive, especially for long-term investments in Africa? And how do you balance returns with development impact?
Une caisse de sécurité sociale peut jouer un véritable rôle d'investisseur institutionnel. Parce que nous, pendant longtemps, on a suivi le modèle français de gestion de la retraite, qui est un régime, qui est un modèle basé sur la solidarité, où on dit que les travailleurs d'aujourd'hui cotisent pour les retraités d'aujourd'hui, en pensant qu'à toute génération, les choses vont bien se passer. Ben, ça ne se passe pas bien, et on a connu des expériences très mauvaises. Et c'est à partir de 2012 qu'on a adopté une réforme pour abandonner ce modèle économique et aller dans un modèle économique simple, comme tout le monde apprend en économie, c'est-à-dire ressources égale consommation plus épargne, épargne investie crée la richesse. Donc c'est ce modèle que nous avons développé parce qu'on s'est dit que si on n'a pas d'épargne, on ne peut pas investir. Si on ne peut pas investir, on ne peut pas être riche. Donc c'était un moment où on a agi sur deux paramètres. L'âge de la retraite qui était à 55 ans, on l'a passé à 60 ans. Et le taux de cotisation qui était à 8%, on l'a passé à 14%. Et donc, dès qu'on a mis en place cette nouvelle réforme, là où on faisait des déficits, on avait accumulé plus de 300 millions de dollars de déficit en 2005 et 2011. Mais dès qu'on a mis ce système-là en place pour vraiment engranger de l'épargne, nous avons commencé à faire des excédents, 8 milliards en 2012, et 33 milliards en 2013, 45 milliards en 2014, pour atteindre plus de 100 milliards en en CFA, hein, là je suis en train de parler 100 milliards de CFA, et atteindre plus de 200 milliards en 2023. Et donc toutes ces sommes, tous ces excédents ont fait que notre portefeuille monétaire et financier, qui était de 26 milliards en 2012, a dépassé les 1000 milliards. Donc un portefeuille monétaire et financier qui était à 40 millions de dollars a dépassé, a atteint près de 2 milliards de dollars de fonds. Et donc, c'est tous ces fonds-là que nous injectons dans l'économie. Nous avons à peu près 48% en emprunt obligataire vis-à-vis de l'État, parce que cette épargne doit permettre à l'État de se financer en interne. Nous avons 21% dans des actions, plus de participation dans les actions cotées, et notamment dans les banques et les systèmes financiers. Nous sommes actionnaires majoritaires de la banque BCC qu'on a repris après le départ de BNP. Et nous avons pas mal d'actions dans plusieurs banques. Nous sommes actionnaires dans les fonds d'investissement comme Africa Invest, Amétis, Africa 50. Et nous intervenons aussi dans des entreprises non cotées pour lesquelles nous avons aussi des rendements très intéressants. Donc voilà comment on a fait en sorte que la caisse de sécurité sociale devienne un véritable fonds de pension et comment c'est reparti dans l'économie. Et tout à l'heure, je parlais de la gouvernance. On a montré qu'une entreprise, des entreprises dans lesquelles il y avait des déficits, quand on arrivait avec de nouvelles règles de gouvernance, des entreprises devenaient bénéficiaires. C'est le cas d'une des banques nationales ici, qui était déficitaire. Nous avons pris 20%. Nous avons érigé les conditions de bonne gouvernance et la banque est excédentaire depuis 3 ans. Pareil, quand nous avons repris les parts de BNP et de Proparco dans la BCC, quand nous arrivions, l'action était à 5400, je crois. L'action est passée, après 2 ans, à 15 000 francs. Donc voilà, c'est pour cela que dès le départ, j'ai dit, il y a mobilisation de l'épargne, gouvernance, éducation financière. Et maintenant, le dernier point que je voulais évoquer, c'est la structuration financière des entreprises. Nos entreprises mettent trop l'accent sur la dette, et ce qui ne favorise pas leur expansion. Et donc, de plus en plus, il faut qu'elles travaillent avec des fonds d'investissement, avec des fonds de pension et d'autres institutions en equity pour réduire la part de la dette. Donc voilà un peu ce qu'on a fait et nous continuons, puisque nous sommes en train de, en plus de ce régime que nous avons de pension basé sur la solidarité, mais avec création de réserves, nous sommes en train de mettre en place un régime par capitalisation qui va permettre d'accroître ces ressources-là. Et c'est pour dire que les organismes de sécurité sociale, notamment francophones, doivent abandonner ce qu'on appelle la solidarité pure, qui ne crée pas de réserve. Et donc, nous, c'est ce qu'on a fait et avec le résultat que vous voyez maintenant.
Thank you very much. Please give him a round of applause there. Very, very impressive numbers, actually. A smart transformation of social security funds into a smart pension fund and increasing the retirement age from 55 to 60 and thereby increasing savings capital by more than 14%. Again, the numbers are pretty impressive. Thank you very much for that contribution. I'm going to come to Mr. Gama next. What measures are being taken by SEC in Nigeria to boost, or rather to strengthen investor confidence, particularly among African institutional investors such as pension funds, insurers, and sovereign wealth funds, as well as encourage their greater participation in local markets? That seems to be a significant issue across the continent. We'll take that question as the last one, and I think because of reasons of time, I'm going to allow each one of our panelists to provide their closing thoughts rather than ask you specific questions. I think sometimes the best responses are the ones that you've come with rather than the questions that are asked. So we'll take Mr. Gama, and then we'll leave our panelists to ruminate for a few moments and then come up with your closing comments. So, Mr. Gama, over to you.
Yeah, so thank you again. For me, it's important that as Africans and as regulators, we must be intentional about what we want to do towards what we want to achieve. And one of the things we have done in Nigeria, basically, we just got the president to sign off our law, the ISA 2025. That law had been in abeyance for the last 18 years, because the last law was in 2007. And there's been dynamism. So clearly it was important that we set out a new law that has all that it takes to be able to drive a future that is deliberate and intentional in making sure that Africa is actually a destination for investment. And in that law, what we have done again, which is, of course, particularly unique, is that we've brought guaranteed companies like InfraCredit into regulation in the law. It is specifically stated. Why do we want to do that? We want to provide governance and replicate those institutions in order to be able to, bring our capital, to unleash capital, which, is important. And how do we unleash capital? It's to create confidence among Nigerians, among the domestic players, to say, look, John, there's nothing to be afraid about, right? Just come in because somebody is watching you and somebody is keeping tab of what you're doing. And that's very critical. But beyond all of this is education. Education, education, education. You can't have enough of it. We assume a lot that we know or the people know. That is just an assumption. You will be very shocked at the level of knowledge, financial knowledge, among Nigerians or among Africans as a whole. So that is important that we share that. We're able to let the people know that this is what they need to know, this is what they need to invest in, and this is how to invest in those things, and this is the result of their investment. So that is important. We must understand that Africa, and particularly Nigeria, is a construction site. The amount of infrastructure that we need is just so huge. And how do we take opportunity in dealing with this? It is by being intentional. But beyond all of this, which will be my last, will be about market development. We need to spread it across. We need to get people to understand it. We need to bring them on the table. We have to go to them. We can't wait watching them thinking that if they go on our website, they will know about it. No, that's not enough. We need to reach them.
Awesome. Thank you very much. Intentionality, raising the bar on knowledge and marketing development. Excellent points there. I'm going to give each of our panelists 1 minute each. I've been given a cue that our time is long over. So again, we crave your indulgence because the next session is about to begin. But this has been a very fascinating conversation so far. Greatly appreciate your contributions. I'm going to start with Chinua Zubike, and then we'll work our way all the way down and end up with Timia Gama at the end, and we'll close out this session. So Chinua, over to you. 1 minute, your elevator pitch here on what we need to do next.
So,
closing thoughts.
Like Solomon Queno, I'm a strong believer in the potential for Africa to finance its development with its own capital. And, institutions like InfraCredit definitely need replication. We need more organizations focused purely on local currency financing, because that is what creates that consciousness around the solutions, the innovations that are needed. And through that lens, we see the huge potential to unlock significant pools of domestic resources in savings. We also see the opportunity to work closer with our financial partners and development agencies to share risk. And we've seen the value of boots on the ground. And so there is huge opportunity, and we're sort of excited about the future.
Thank you very much. And over to Dennis next. 1 minute.
Alors, nous avons un objectif d'ici 2050. On avait commencé depuis 5 ans à satisfaire à ces objectifs. Le premier, c'était que par nos produits financiers, nos produits de placement, nous couvrons toute la masse salariale. Ça, c'est fait depuis 5 ans. On est à presque 2 fois la couverture de la masse salariale par nos produits financiers. La deuxième étape, c'est que nos produits financiers doivent financer et la masse salariale et les autres charges. Nous sommes à pratiquement 80%. Et le troisième objectif, qui lui, on se projette d'ici 2040-2050, c'est que les produits financiers doivent couvrir l'ensemble de nos prestations que nous payons, l'ensemble des pensions que nous payons. Nous sommes aujourd'hui à 25%. Nous voulons être à 50% en 2030 et en 2050, nous voulons être à 100%. De sorte que toutes les cotisations que nous allons collecter vont être directement injectées dans le développement de l'économie et parce que nous finançons nos prestations avec les produits de placement, les produits financiers. Voilà notre objectif.
Excellent. Ethiopians?
2 points from me, and I'd like to invite institutional investors along with us with respect to these 2 points. First, local currency financing. Many of the companies that we're looking to finance on the continent don't generate revenues in anything other than local currency. It is important to lend to them in local currency so you're not creating a burden by virtue of hard currency lending that is hard for them to sustain. And institutional investors in country are one of the better sources of local currency. So please join us in that effort. We're trying to figure out how to do this consistently in each and every country where we have operations. And we have different sources we can use, but you would be an important source that we'd like to accompany. Second, equity, which is the ultimate form of local currency. It is probably the most important thing we need to do, and I was heartened to hear from what Denis was saying with regard to what is happening in his country. We need to do more equity investment. I'm fond of saying with debt, you run a company. With equity, you build a company. And what we need to do on the continent is build companies.
Thank you very much. Very, very good points there. Boitumelo?
Thank you, Victor. I think it's very clear that the future of the globe is Africa. And we need to ensure that as Africans, we learn to collaborate with each other. We are beyond competition. Collaboration is key as we embark on this journey. We need to address issues around governance. We need to strengthen our institutions. And I'm advocating for investment in national development banks and support for national development banks so that they are enabled to create and fund opportunities locally. Thirdly, it's a programmatic approach to investment is key to enable standardization, scale, and speed. And lastly, to achieve regional integration, yes, we need to get the governance right. Yes, we need to get the accountability right. But I think as Africans, we also need to learn to kiss each other's rings. We need to kiss each other's rings as brothers and sisters so that we can get infrastructure development going on our continent. Thank you.
Very well said. And our last comment will come from Timmy Gama.
Yeah, so clearly for us in Nigeria, what we're doing is promoting, an investor-friendly regulatory approach. That is to say that the time where the regulator is being, is far away from the people is over. We need to talk to each other. We need to speak to each other. We need to clear, doubts around, transactions, and we need to help even the client, the operators, to be able to achieve the purpose for which they are meant to achieve. So besides that also, we need to find a way of standardizing regulation because it's a major problem. I believe that we should start adopting a passport model whereby the issuances in one particular country can, with just a little tweak, be used for other countries in order to facilitate quick delivery of infrastructure, quick delivery of issuances, and of course, quick delivery of returns for the people.
Timmy Agama, thank you very much. And on that note, I'd like to say a very, very big thank you to